All right, guys. Thank you for joining me again today. It is Thursday, June 2nd. Right now it's noon, a little after noon in New York City. We've had about half the day already. Interesting price action today. Um, the thing that's probably on everybody's mind is what is going on with oil. So let's take a look and see what's going on here. All right, there. You should see my screen now. Um, let's take a look at oil. All right, so here's oil. Last night, I think we had some news. I actually purposely didn't watch the news or look up anything on oil since last night. And I did that on purpose because I do not want to be affected by any story that the media has. So this is the untouched kind of my own opinion based on the data that I'm seeing. I have no idea what happened at the OPEC meeting. I have no idea. All right. But this is what I can tell you. All right. So around 6 o'clock in the morning, 6:30 in the morning, New York time, we saw prices come down and hit a bottom of around $111. All right. It was around 6:30 or 6:40 in the morning. At that moment, what happened was there was a huge order of 110 puts that got sold right at the bottom. I mean, we're talking thousands of contracts. All right, hundreds and there were first it was 20s ones came in, and then all of a sudden over a period of a few minutes, there was about a couple thousand 110 puts that got sold, and I think that's what caused the bounce. All right, and so that definitely looks like more of a seller's exhaustion, and it looks like, yeah, and it looks like whatever the news was, definitely it moved prices, but then it was able to take all of that. All right, the market was able to take all those orders and it bounced. So that's pretty bullish in the short term. Okay, and I think the reason why it's bullish, no matter what the news is because of this chart. If you're an oil trader, what you really should be looking at is gasoline futures. And as long as this chart is going up, there's always going to be a floor on crude. Because what the refineries are basically doing is they can short this contract, the gasoline futures, and just go long on crude. And basically that's just free cash flow for them. All right. And as long as this chart is still going up, I see the floor on oil rising. Now, going long on oil at this point is probably a very difficult trade. If basically to me, in my opinion, the best risk to reward is actually going short. Not now, but once this rallies and once we see gasoline futures turning down and breaking some sort of support, and we see it actually collapsing, that will be our signal to short oil. And generally oil, it's not, in commodities, because there's so many participants, it doesn't go straight up or straight down unless there's some, act of war or something like that. So even if we miss that initial dip in oil, most likely it will retest that dip. And on the retest, we can then short oil. Okay. What do I mean by a retest? Oil has all these, retests. For example, right here, back in, when was this? This was back in 2021. We had the initial dip, and then we had a retest of that, and then it continued downward. All right. I suspect once gasoline futures come down, and the gasoline, basically, the crack spread, basically it's the cost of buying oil and then selling the distillates that are, gasoline being one of them. And as long as gasoline prices are high, that crack spread is wide. And as long as that crack spread is wide, it's very profitable for people to keep buying crude and producing gasoline. Right now, based on the data, it looks like refineries are buying lots of these futures. These futures are for July delivery, so they actually expire later this month. So after the oil gets delivered, usually it takes about another couple of months to refine it into gasoline, and then I suspect that in October or November, we're probably going to see a flood of supply in gasoline. All right, that's my initial guess so far. I think that once October, November comes along, we're going to have too much in gasoline, and then we're going to start seeing this crack, all right, or this break. And then once that crack spread starts narrowing down, people are going to stop buying crude, and that is, I think, when the risk reward goes in our favor for a short. I wouldn't touch this right now. Honestly, I'm just waiting. I'm waiting for that short, and I think that's going to be the better position or the better play to do. And again, I think that is probably going to happen around October, November, based on when this oil gets delivered, and usually also seasonal data. That's usually when there's a slowdown in demand from the refineries, because they're also, they stop buying because they have to get their refinery ready to make the winter blend of gasoline. And they usually shut down for like a couple of weeks for that. So right as they shut down to make their winter blend, if we have a huge supply of gasoline come into the market, and the summer driving months are over, what do you think is going to happen? Definitely I can see prices coming down from there. So maybe that's where we take our shot. But I think that is the real story here. It's not about, maybe OPEC, yeah, maybe this and that. But for me, the biggest thing for me is really the gasoline future. I mean, look at that. That is relentless. I mean, if you can take crude oil and you can, make a bigger spread and sell gasoline, I mean, why wouldn't you as a refinery? So again, as long as this keeps going up, that floor on crude oil is going to keep going up. So after this, I'll look up what the OPEC story was. I have no idea. I think it's irrelevant, really. I think it's already all priced in. Whatever OPEC was going to do, it was already priced in. But I think this is what's really driving the oil market. So, okay, so there's that. Let's take a look at the broader market and see what's going on. Let's see here. As we can see, dollar is down. Our euro calls that we bought on the euro futures, they've gone up. So that's good. The positions that we entered yesterday and the week before for QQQ and SPY, those June OPX call debit spreads, they're also performing. For those of you who follow my Twitter or have been in the group chat this morning, you also saw that I went long on IWM call spreads as well too, for 197.200. Also, it's a lotto. Those are also performing very well. I bought those on the dip this morning. Right now it looks like volatility is coming down. And so, one of the things that I'd like to go over today, and I know, in the past I've gone over this before, is what market makers do. We're getting closer to monthly OPX, and I think it's important for people to understand how market makers can affect the underlying price based on options trades. So whenever an institution or, let's say a market participant buys a put, the market maker has to sell that participant a put. Buying a put is a short position. Selling a put is a long position. Market makers are delta neutral, meaning that for every incremental change in the underlying, let's say in this case it's SPY, for every incremental change, they do not want their portfolio value to change. They don't take sides. They basically, sell to both sides, buy from both sides, and they collect a spread in between. They actually do not take a directional bias, usually, all right? And so, again, the market participant buys a put. Market maker needs to sell a put, which is a long position. So to offset that long, they need to sell a certain number of SPY shares to remain delta neutral. Okay, so this phenomena is what drives a lot of the index ETF activity. The opposite is also true. When you buy a call, actually, we just went through an example of a market participant buying a put. If the market participant sells the put, the market maker has to buy that put. Buying a put is a short position. They need to offset that short position with a long position, so they will buy the underlying. So in this example, they're buying SPY. Every time market participants are selling or cashing out of their puts. So right now, from yesterday's morning session, I showed you guys on SPX these huge put walls that we have in the market. All right, so as time progresses and as the VIX, the volatility goes down, delta also gets affected on these puts. These puts deltas are actually shrinking. And as we get closer and closer to expiration, they're actually deteriorating. The deltas are actually deteriorating faster. Of course, the ones that are out the money deteriorate faster than the ones in the money. It just continues and progresses. All right. The market maker still has to balance out their books. So if they have all these puts in their inventory, all right, all these short puts, and the deltas are decreasing, well, what does that mean? They have to then increase the number of shares they purchase in order to make their portfolios delta neutral. So that's the phenomena we're seeing right now, okay? I'm not actually seeing a lot of put selling. I don't see a lot of these big put orders coming through, but I think it will happen soon. I think within a day or two, we're going to have this, this cover or perish moment where, if the market doesn't go below 40.50, if we don't see like a VIX pop, if we don't see that IV pop, if we don't see, the SPX come down to 40.50, I think then a lot of institutions are going to do cover and perish. A lot of market makers will have to even out their books. A lot of institutions who are hedging will have to cash in their hedges. And I think all of that together will force us up into OpX. I believe it enough where I've risked money for it. I mean, they're all small positions, they're lottos, and if it pays out big. But I'm still managing my risk by keeping those positions small because I could be wrong, right? We could always be wrong. This usually works about 80% of the time. 20% of the time, it doesn't work. Sometimes it fails, but overwhelmingly though, this works. And we have. Look at these OIs, again, this is SPX. This is 10 times larger than SPY on a nominal basis. So we have, 300,000, 200,000, in SPY equivalent contract open interest. We have 200,000, 30,000 here, which is like 300,000 in SPY, 350,000, all from here to 45.50. We actually have more outside of that, but if calls don't get sold off, then we're going to have a situation where there's also going to be a lot of in the money calls. So I think that is going to start putting some downward pressure on prices at around that 44.50, maybe even possibly before that 4400 level. And I think this is definitely within the realm of possibilities by OpX. So we'll see. We'll see what happens. I think there's about another day or two, and then it's cover or perish. It needs to get under 40.50 within a day or two, in my opinion, or else the algos are going to go crazy. So that's what I see in SPX. Okay, so that's equities. Let's take a look at other things. One of the things that I wanted to point out was that we've seen some interesting action in currencies, especially the Australian dollar. This is a massive rally. I mean, this is a huge rally. So, and and maybe this is signifying that it's the end of the peak zero COVID policy shutdowns in China. Maybe that's what it is. Actually, you know what? I haven't checked the metals market. Let's actually check the metals market. Usually, bullish AUD is a very bullish sign of metals demand. Let's just take a look at gold. Gold up. Silver up. Wow. Let's look at industrial metals. Copper. Wow. Look at that. Look at copper. Made a huge move today. Okay, so maybe China's coming back. Maybe China's coming back. What's China doing? Oh, wow. It rallied today. Okay. I mean, I don't know. I don't know about belonging China. It's just one of those indexes I don't like to long, but from what I see, looks pretty good. What's metal miners doing today? Oh, wow. Doing very well. Doing very well. Okay. Especially the industrial metals. I mean, that's a crazy move. I mean, with the futures contract, hold on. How much is that? What kind of move is that? That's 455, 40 cents. So what? 124, 242,000. Wow. That would have been a $9,000. That's a $9,000, $10,000 move per contract on the copper futures contract. Wow, amazing. Okay, so somebody knows something we don't. If there's no news out in China, somebody knows something we don't. Definitely. I mean, this is the tell right here. That's the tell. It's the Australian dollar. You don't think somebody at the Central Bank of Australia knows something? You bet your ass they do. Somebody knows something. Interesting. All right. Speaking of other commodities, let's take a look at some of these grains. Let's look at corn. What's going on with corn? Okay. Tapering. Wheat. Interesting. Looks like wheat is forming a little base right here. It's possible. Actually, let me go back to corn. Let me take a look at implied volatility here. It's dropping. Okay. Let's get soy. Wow, soy actually looks like the strongest of the grains. Soybean oil. Soybean oil is also up. Let's look at soy meal. What's soy meal? Is it ZM or yeah, soybean meal ZM. Okay. Let's take a look at usually pigs are fed corn. Let's take a look at what hog prices are doing. Oh, wow. Looks like hog prices are about to break out. Possible. Wow. And then cattle prices, of course, have gone up. Okay. So, yeah. And cattle prices have already gone up in response to those grains, I think. That's interesting. in that case, what is McDonald's doing? Yeah, that's not good for McDonald's. So it looks like costs may be increasing for McDonald's. Maybe they're not as hedged as well. Um, Maybe that's what the market is expecting. That's interesting. All right, we'll see. We'll see what happens with the grains. I think in the next couple of weeks, it'll be very telling, especially in the corn. I think something's going to happen in the corn market. And as we get closer to that date, I will share some of my data with you all on what I think is happening. But I'm not sure yet, so I don't want to share it yet. But as we get closer and closer to the 16th, I think we're going to see some big movements here. And I think that's going to spill over into the rates market. It's tapering off just a little bit here. Let's see what TLT is doing. TLT is coming down. Let's look at long-term bonds. They're flat. So we're seeing that bonds are stabilizing. I know one of the things that I track, I know some of you have seen me track this before, is the MOVE index, which is kind of like the VIX for bonds. The exchanges used to track this, but they don't track it anymore now. I think Bank of America tracks this. So ever since Bank of America tracked it, I don't think it's been that long since they've tracked it on their own. Before this, it was tracked by the exchanges. Why it happened this way, I have no idea. I have no idea why they stopped tracking this. But it's been fairly correlated with the VVIX. Since about early May or so, it's been very correlated. Now, it broke that correlation yesterday, but that's just one data point. I mean, still for the most part, it's still fairly correlated. So if we can extrapolate, because the MOVE index is calculated at the end of the day, so seeing that VVIX is down like this, I can see the MOVE index coming down as well. But historically, the MOVE index has front ran a lot of the volatility in other markets, especially in equities. I do expect there to be some interest rate volatility and bond volatility on the week of the 16th of June. I do expect that. I've been expecting that for a while. Some of you guys, looked at my fractal charts, like a few weeks ago. And even on those fractal charts, that little voodoo magic that I did, even that was showing that, we're going to see some type of volatility in equities in the middle to end of June. I think a lot of that has to do with the bond market. I've been saying it for months. There's also a huge amount of long-term bonds that are coming due and maturing from 20 years ago when they had 6-7% yield. They're going to mature in the middle of this month in June. So those bond funds, are they going to roll over their bonds into lower yields, into this 2.8% yields? I don't think they're going to do that. And I think we're going to see a lot of people exit, more people exit bond funds, which I think is going to cause a spike in rates. And I think that's going to start happening in the second week of June. And that, I think, is when we're going to continue this kind of medium-term downtrend in the equity markets. Just thinking 5 or 6 steps ahead. We do call ourselves checkmate trading after all, so it's we have to think a few moves ahead, right? So that's what I'm seeing in the overall equities and rates markets. What I promised today that I'd also talk about Bitcoin. Let's look at Bitcoin for a second here. I like to use Bitcoin futures to chart. The reason for this is because futures rules are codified, and it's and the closing price is always the same no matter where you are. The closing price of Bitcoin futures is the same here as anywhere else. However, Bitcoin at the exchanges, every exchange has got a different closing price. So sometimes the candles and sometimes the charts look a little bit different. And so I just like to use this one just because there's probably more people using this than any one exchange's chart for Bitcoin. Maybe I'm wrong, but with the information that I have, I think this is my best bet to use. But anyway, I've been posting recently on Twitter that we've been seeing a lot more volume in weekly and quarterly options expirations in Bitcoin. And Deribit holds, I think, 80 to 90% of the open interest of Bitcoin. And let me just get Deribit up. Give me 1 second here. Bear with me. All right, very good. Here it is. Let's look at I want to see gammas. I want to see thetas, volumes, last. I don't need to see positions. Okay. All right. So this is the weeklies. This expires in about 15 hours. About a day or two ago, I posted that, hey, it looks like Bitcoin is going to have a range based on options positioning between 3,200 and 3,000. And at that time, how I figured that was, it was one of the greater OI and volume strikes. On the put side, it was on 30,000. On the call side, it was at 32. And at that time, I said, I suspect that if it goes to 32,000, we're going to see those calls get sold. And then if we enter, 3,000 or a little bit under, we may see put sellers come through. And in the last 2 days, that's what we've seen. If you look at the chart for Bitcoin, that's kind of what happened. It's kind of what happened the last couple of days. All right. I think Bitcoin is getting more and more institutional participation. That's the point of all of this. Just like SPY, just like the indexes, I think Bitcoin is starting to see that institutional participation in options markets. There must be some holders and they're hedging. Either that or maybe they have some options positions that they hedge, but whatever it may be, definitely we're seeing more of that type of derivatives and dynamic hedging that we usually see on equity indexes. I'm starting to see signs of that in Bitcoin, which, that's good for those who believe in adoption of cryptos. Sorry about that. I just hit something on accident. I think that kind of dynamic is here to stay. And if we look at the quarterly also has a lot of action for this month. Well, we only have 1 day. I think, if you want to see what's going to happen in the next week, we should look at some of the weeklies. So the June 10th weekly, we see more of a larger range right now. I'm just from the open interest, maybe, the upper end is going to be like 32 to 3,300. And then on the bottom end for next week, I can see it being around, wow, that's a lot of volume right here already. Anywhere from 2,800 or so. So that's the range, 3,200 to about 2,800. And I'm sure as we get closer and closer to expiration, the more at the money strikes are going to see more action. But I think that's pretty interesting. It's just an observation that I've made. Let's see if it continues into next week. As we have more of these calls, we'll check up on the Bitcoin action and the derivatives market and see if our theory holds true. And if it does, let's say this continues for a bit, I think then we can come up with some dynamic option strategies around this. I think that's definitely possible. So as a team, maybe we can come up with some strategies together around this. So just an observation that I've made. I'm no crypto expert, but that's just what I see. Okay. Yeah. So that's all I had planned for today. Let me go ahead and open it up for questions. I'm going to stop the recording here. Actually, you know what? No, I'll keep the recording going. Let's just get. Who cares? Unless you guys want me to stop the recording so you guys can ask questions. What's the vote? Should I stop the recording for your questions, or should I keep your questions also recorded on the tapes as well? Message me on voice chat text. Keep recording of the questions? Is that what everybody's vote is? Maybe edit out if they're shit. Okay, well, there's no such thing as shitty questions. There's just shitty people, right? Okay, so yeah, let's just go ahead and open this up. All right, let me see here. Edit the channel, permissions. Oops. Give me 1 second. Bear with me here so I can open this up. All right. You guys should be able to speak now. Are you guys saying anything? Or you guys can just... you're not able to speak still?
Oh, hey.
Oh, there you go. I heard you. Wildy, I heard you.
Yes.
Okay, very good. So, yes, I open it up for questions. Any questions? I see people typing. Let's see if we get any questions here. You have to leave and rejoin to speak. Oops. Okay. If you want to speak.
Can you guys hear me?
Yes, MSC, I can hear you now.
All right, great. So I did message. Can you pull up that funding rate from that website I sent you? I know a lot of flash moves in crypto do move from high funding rates in either direction.
What was the website called?
I think it was, is it glassnode.com?
Glassnode?
Or Crypto Glass. I know I messaged you. I'm driving right now, which is why I can't pull it up myself.
I know what you're talking about. You know what? I think I bookmarked it. Hold on. I can't see it. Hold on. Give me 1 second. I can't see it. Coin Glass. Okay. Yep. There it is.
So for everyone, this is a good resource. A lot of the times, if there's like too many people long, there will be a high funding rate to go long, and market makers will try to skim that really quickly. And these market makers can be the exchanges themselves because they don't want to pay out.
Can you give us an example?
Several times during the bull market for Bitcoin, when too many people went short on a big run, it would do one exhaustive push up, and then drop down immediately because it ran, everyone stops and sells.
And that you can tell by the funding rate, you said, right?
Correct. So if you're looking at it, can you click on Bitcoin specifically? I can't really see in that well because I'm driving.
Okay.
But
there we go.
if you see long you'll see it's negative. It looks like right now they're paying people to go long. Is that what I'm saying?
It looks like the price line is no, that's the price line. So we're looking at funding rates. I mean, it just depends. It says on CoinEx, it's 0.25%.
So it's positive to go long.
It appears so. It's a
So
positive
right now it looks like there's so many people short that they're paying people to go long. I would say that there's a good chance we see a spike to run those funding rates back to somewhere more neutral. It might not be a big move. It's just going to be a move that will liquidate some positions to not have it so skewed in one direction.
So
These are for perpetual futures, though. These aren't for the dated contracts.
So you're saying that if the funding rate is high, that there is a chance that they're going to try to run the stops on all the shorts, so we may see a squeeze upward.
Exactly. Usually, the more negative the funding rate goes, the higher the chance of that happening.
I see. That's interesting. Okay. We'll observe that, and let's see if that turns out the way it is. And if it is, that would be a great signal going forward on moves. And maybe we can include that in our trading strategies as well too, monitoring this data point. That's very interesting. Thank you for sharing that with us. That's actually really interesting stuff. I'll keep an eye on this. I'm going to keep an eye on this, and we'll use it as need be. That's interesting. Let me see if
It's just one data point, but I like it.
yeah. Let me see if we have this similar thing in ETH. Oh yeah, we do. We have something. I mean, it looks like it. I'm gonna have to run the numbers to just make sure. But that actually looks quite interesting. Okay, I'm gonna have to.
I wish there was an easy way to backtest.
Yeah, there isn't because this is so new that there's not enough data for this. With Bitcoin at least, I've been noticing that the volumes have been rising steadily for the past, I would say 2 quarters or so. It's really gone up a lot in the last 2 quarters since like around November, December, which is interesting because that's around the when liquidity was starting to leave the market. So it's kind of interesting how this kind of expanded as liquidity was leaving. But maybe there's a reason for that. Maybe it's because mostly it's people who are long on it, and because of liquidity concerns, they're hedging. It could be that. So maybe it isn't so strange.
So for the first time in a long time in crypto, there is more hedging by whales because they have the opportunity now with things like OKX, FTX, and Binance, where in the past they would have to sell their position in order to hedge.
That makes a lot of sense. Okay. So maybe that's a new dynamic in the market. So usually when the dynamics of a market change, there's a lot of opportunities to trade that movement. I don't think we have seen that movement yet. Usually these kind of movements take time to manifest. It can take up to a year or 2 years to really manifest them. So maybe we're on the cusp of a new type of pricing regime for cryptos. Could be. Okay, that's very interesting. Very interesting. Definitely, I'm going to keep an eye on this. Okay. MSC, again, thank you. Thank you for sharing that. That's a wonderful find. Thank you.
No problem, guys. Enjoy.
All right. So anything else that anybody want to see? What the fuck is AMD doing? You want to see AMD? Is that what people want? AMD and NVIDIA? Let's take a look. Oh, wow. I mean, that is... it's all of tech, right? All of tech is pretty much flying right now. Yeah, because everybody was short. Everybody was overhedged, and it doesn't really take much volume to move prices right now. It's all options driven. Everything's probably up, right? Indiscriminately, right? Oops. Indiscriminate. Oh, except Microsoft. Huh. Amazon. Facebook. Yeah, I mean most of them are up today. Look at Nvidia. I mean, I think it's just all part of the rally right now. I think every tech stocks are the most sensitive to liquidity. The Nasdaq and the Russell 2000 are the most liquidity sensitive indexes. Let's take a look at semiconductors in general. Yeah, semiconductors, everything is up. More dividend paying tech, they're up. Not as much as growth. So yeah, it looks like growth is getting just a little bit of a leg. I think this is in the bigger scheme of things. This is a bear market rally. Okay, the medium to long term right now is down. And I think most institutions, what they're doing is they're just waiting to hedge or sell at higher levels. So yes, even though I'm long right now, it's just very temporarily. I will be creating put hedges either later this week or next week. I think there's still some more to go in this rally, but definitely starting next week, I'm gonna start building those hedges. Actually, let's go through some hedge building right now. If I were to build hedges today, which I'm not going to, because I just think that there's going to be more to this rally. But if I were to right now, let's take a look at these Decembers. What's going on with these Decembers? Let's see here. So that would be interesting. Those are at 96. So that will give you, so for, that one has a 4-to-1 reward to risk ratio. And you have 197 days on that. If I were inclined to hedge now, I'd be looking at those. What about an IWM? Yeah, you know what? I would wait. That it's just not there. I need to hedge a little bit higher. It's just not that appealing right now. So let's give it another couple of sessions and let's see then if it's worth. Well, no, we're gonna have to start hedging next week. I mean, push comes to shove. I think, there's gonna be volatility this summer. We have to hedge. Okay, so. Regardless, I'll start next week. Hopefully we can get some better pricing, and hopefully the IV will kind of dissipate on some of those longer options, but we'll see. There's no guarantee of that. We'll see. We'll take it one session at a time. Hopefully we can make these calls more of a regular thing. I'd like to do this on a regular basis. If it were up to me, I'd try to do it every day, but I'm entering also one of my busiest seasons in my other business as well. So it's kind of hard to devote every day to this, but I would like to devote at least 2 or 3 days for this. So right now, for the next couple of months, I can devote Tuesdays, Wednesdays, and Thursdays at the same time, around this time, around noon Eastern time. I think that would be good. Tuesdays, Wednesday, Thursdays, noon Eastern time. Let's get back in the pit. We'll talk about, on Tuesdays, we'll talk about, all the things that happened on Monday and the start of the week. How the week started and how we can end the week strong. On Wednesdays, we'll talk about, any open positions that we have, ways to manage, when to manage, all those things. And then on Thursday, Thursdays are going to be like, either damage control or, again, continuation of managing positions. So I think next week is going to be more of that kind of structure for the week, as well as the week after, because we are getting towards OpX and quad witching. So I think it's important that we talk about, ways to limit losses, ways to hedge for what is to come, and to really think 5 or 6 steps ahead. Anybody else? Any other questions? Any other things that you all want to talk about?
Also, real quick, on Mondays and Fridays, we could always just have the same time meeting, even if you can't make it, and just have a group idea session.
Sure. You all are more than welcome to do that. I've opened up the permissions on all of you again, so you can use the pit just to talk amongst yourselves in voice. Go ahead, share away, and then, on Tuesdays, Wednesdays, and Thursdays, though, I will commit to being with you all and leading those discussions as well as recording them. And I'll put those recordings out on the wiretaps so that you all can, review those as need be. Any other questions, concerns, rude remarks, anything? All right, guys. Well, it was a pleasure. It was a pleasure being with you all today. Let's end the day strong, and we've got another half day left. So maybe I'll be back at the end of day, and maybe we can have like just a quick 10-15 minute session right before market closes, and then we'll go from there. All right, guys. Good luck.